So here is an example of the differences between how each model will view and grade specific things. So uh FICO 8 is our standard score. It's the score that most of us are used to dealing with. It's the score that we see when we log into most of our credit apps. It's literally like the most used versions of our credit score for the last 20 plus years. Um, the classic FICO refers to the mortgage score, specifically FICOs 2, 4, and 5. Now, the top two are our standard scores that we've been dealing with, and then the bottom two, which are FICO 10T and Vantage 4.0, are the new scores. So for paid collection specifically, typically with our standard scores, our FICO 8 considered paid collections over 100. It affected your credit score. So any collection account that you have on your credit report that has a balance of over $100, then it does lower your score. One of the only great things about the newest versions of our score, which is FICO 10T, is it does ignore paid collections. So if you have collections that you have not been able to get removed, if you pay those off by way of settlement, or if you pay it in full, then that account will be taken out of the consideration of your FICO 10T score. So that's great news for people who have been affected by collections. Their FICO 10T score, if they pay it, it will increase as a result of that, right? Um, and then let me see here.
Shonda, can you go back to that slide for a sec? Because and maybe you can clear this up for me.
Yeah.
So your FICO 8 could be a score. Let's say it's a 690, right?
Mm-hmm.
But that classic FICO 245, that actually could be different, right? So I'm saying that because I actually experienced that. Like I had a score, I'm thinking like, oh, I'm going to get approved for this mortgage. It was a pretty good score. And then they went back and looked at my classic FICO because that was for the mortgage. And it was drastically different. It was like, I think it was like 570 something. I'm like, wait. And I had to get an explanation on that. So they don't always have to be like the same, right? It could be drastically different.
They're hardly ever the same. I tell people all the time, like if they are all the same, there would be more shocking to me to see all of them being the same, simply because each of those scores are based on a slightly different algorithm for a specific reason. So the classic FICO is a mortgage score, so they will grade installment-based accounts more heavily than, let's say, like a FICO A score, which will consider like credit card accounts and your utilization more important than your behavior on a loan. So they will each scoring model will prioritize different things based on the industry that they are selling it to. So it's industry specific. If you are seeking a car, most auto lenders will pick FICO 6, which is our auto score. And all that it's just slightly different variations of the FICO score tailored to specific industries. So yeah, it's the classic FICO, which is the classic. It's the oldest version. It's the most antiquated version, and it's the hardest to increase. Like that score is the most stubborn score. But the great news is the new credit scores, FICO 10T and Vantage 4.0, it was actually approved to be used as the new standard for mortgage scores. So after second quarter of this year, the Federal Housing Association, they like any Fannie Mae loans, Freddie Mac loans, whatever, any government backed loans, they will only base our mortgage approval off of FICO 10T and Vantage 4.0. So we no longer will have to deal with the classic FICO scores. They're being completely they're going away. Like they're being antiquated. Like no one will use those scores anymore after second quarter of this year, which is why it's so important that right now people are making the changes and are aware of FICO 10T and how it is going to impact us differently, because those are going to be the new standard. Like it's going to be the new standard across multiple industries, not even just mortgage.
And that helps a lot of borrowers, right? Because if I'm using a standard, my score is going to be high. I get a better interest rate.
Yeah, it'll help. It'll help. So it'll help if you have been responsible with building credit and making sure you pay your credit card back, making sure you're not getting collections and stuff like that. Then your FICO 10T score will likely increase. It'll likely increase. However, If you have not been doing that, then your FICO 10T score is absolutely going to be lower than the scores that you're used to dealing with because of the trended data. So trended data
Oh,
is
yes,
so
yes,
important
yes,
because, like
yes.
I said, if your trends are showing you sporadically are paying your credit card off, like one month you max it out, the next month you pay it down to 10%, the next month you report 20%, that sporadic utilization will cause a drastic increase in your FICO 10T because it's based on trends. What is your trends showing? If your utilization is not showing a negative incline in terms of the balances that you are reporting, then you will be penalized for that under FICO 10T. Um, if another big change is if you are transferring debt across your credit profile, for example, like if you are using a personal loan to pay off credit card debt, a very common strategy that a lot of people use, FICO 10T actually will penalize you for that. So that's no longer going to help us. Which that's a little unfortunate because a lot of people will take out like a loan in order to pay down their credit card debt or pay off their credit card debt because the heavy interest that's associated with credit card debt, right? Or to just stop that interest from mounting. That's a very common practice that has been used for ages, but unfortunately, FICO 10T views that as not you decreasing your debt. They just view it as you migrating the debt, right? Like, so they penalize you for that. If there's not a steady decline in your debt, overall debt to income ratio, then you'll be penalized. You'll be
Hmm.
penalized. So yeah, like it's a lot tougher on us because, like I said, you could have done something or reported a high utilization over a year ago, and that one month is still will still be affecting you for the next 4 years. And in case people don't understand, like as of now, our utilization refreshes every month. Utilization keeps or holds no record. So if I max out my cards last month and then this month I get them down to under 10%, I'm going to be accredited back all the points that I lost last month. Like it holds no record. Utilization is per month, right? As of now, not with FICO 10T. Now you have to worry about every single utilization that you have reported for the last 24 months because that will affect you for the next 2 years.
Dang.
So, yeah.
Well, that sucks. But one good thing, medical debt no longer part of the
Mhm.
credit report. Yes.
Yes. Medical debt, any medical collection on your credit report under $500 automatically has to be deleted by law. Or if you settle or pay off a medical debt that was over $500, then it has to be removed. Um, in addition to that, your doctor, your provider, they can't even send your a medical collection to the credit bureaus until they have given you at least 18 months to pay whatever you owe from the date of from your visit, right? So they have to give you 18 months to pay it. If you haven't paid it, if you failed to pay it and you owe them more than $500, that's the only case that they can send it to the credit bureaus. But most medical collections usually fall under $500 because most of them are like copays and stuff that people didn't pay. Those don't qualify for our credit reports anymore. So that's amazing. Like, yeah, that's awesome.